Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and what we meet for this evening is to talk about the opening futures action, and we talk about tonight the monthly charts, and we talk about where the path of least resistance is on the major averages, commodities, and bonds in some subsectors. Now, I'm beginning with crude oil prices, because there was a lot of headlines over the weekend by OPEC saying Reuters' FOS about their report last week, which I subsequently reported that OPEC was going to increase output, and OPEC said no, no, no. Now, I'll take you back 1 week ago, and I brought up the chart. I guess I'll go to it now as we're watching this play out. Let's bring up crude. Everything's in order. Here we go. So I went over the weekly chart of crude last week, and I said, man, after closing out so strong the week prior, I mean, we had taken out all those lows. They blew through all the stops and they took it up higher. That's what you call a liquidity flush, meaning the big boys aren't happy with paying retail. No, 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 no. They need to go in with big, big contracts, and they need to buy big lots with a lot of liquidity so they don't drive the market up against themselves. So I said, wait for a pullback this past week. Let's see if we hold that support level. If we do, I think that it's a buy signal on oil. Oil ultimately closed down last week 7.65%, closing below critical support levels. So the question is this week, do we close out the week above 62.50 the barrel on light sweet crude? If we do, bullish, very bullish on oil. Add to that, I digress, to extrapolate, since we know here that correlations matter, and we know because we are educated and we take a look at the correlation between energy stocks and oil, we know that historically they trade about 75, 80% in tandem. That really rolled over last week. And while oil broke down and closed at new lower lows, energy stocks held support. So were it not for the news event over the weekend by OPEC saying that, you guys are full of crap, Reuters, you told everybody on an anonymous source, which is what they always do, anonymous sources, they said that you're going to increase output, meaning OPEC's going to increase output, thus dropping oil. Who do you think made out like bandits on this deal? So as you can see right now, those who played the game and manipulated the market are getting paid very, very handsomely. Would I buy here? No, I'd wait for close above 62.50. That's what we're looking for. Let's set up our first trade alert of the week and a resistance level. We want to get above resistance. We don't want to get lured in to some four-dimensional chess type of gamesmanship going on here. We don't know whether or not we're right, we're wrong. Did we get manipulated? Did we not get manipulated? How do we know when it's safe to go back in the water and that gets swallowed alive by the big boys? Simple. You wait for higher prices. You wait for this resistance level here at around 62.54. You start taking out those highs, higher lows, higher highs, because at current, you take a look at this chart on a daily time frame, and what's it telling you? It's telling you it's in a correction. It's in a downtrend. The path of least resistance, even though we're up 1.26% at current at the open, the path of least resistance is still down. It hasn't changed. So we're disciplined. We're not going to go chasing in right now and saying, oh boy, we call this, we got it right. We got to go buying oil right now. No, 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 no. No, 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 no. No. We're not going to do that. I would rather pay more for the probability of being right. All right, stand left. I like that resistance level. And let's make it a pretty, I don't know, orange. Orange will be nice. And there we go. You know what? It's kind of clashing with my moving average. I'm going to change that to a blue. A blue. And there we go. That's the story with crude oil, folks. It's looking really good. I think they manipulated oil. I think last week should have been a retest. We should be looking at a breakout this week, or we should have been looking at a breakout this week. Didn't happen. And they're even starting to fade it a little bit now. Now we're only up 0.89%, 0.90%. Don't go chasing. Let it all settle down. Shorts are getting squeezed right now. We watch. We wait. We have no stress. It's all good. Since we're beginning with, let's go to comments, make sure my audio is good. Usually when I go this long with my comments without checking the feed, my audio is not working. People are saying, turn on your audio. Andrew E. Reynolds, hello, sir. BlackRock Gold ETF IAU. It's probably run a heck of a lot. I'm assuming that is a long ETF. Yes, sir. The path of least resistance is clear. It's defined. It's up, but it's getting extended. OIH, we could talk about that one in a little while, Andrew. And Andrew, thanks for the super chat. Appreciate that. Thank you very much, sir. Franklin, good evening to you. We'll definitely go over the OIH for you. Miser, good evening. George from Quebec, good evening. One of our ostriches got killed up there. Larry, with no economic data being reported, government shutdown, yes. Does that mean no rate cut this month? No, they're going to go with the rate cut. The FedWatch tool, which I'm glad you reminded me, the FedWatch tool is basically the indicator from the street telling the Federal Reserve, hey, this is what the street's expecting. Don't disappoint us, please. Please don't disappoint us. You won't like it. And we'll go over the rate cut probabilities in a moment. TZ Burton, welcome. Everyone yeah, I was in the pool today. I didn't close up my pool. Normally it's closed by now. I was in the pool yesterday and today. Freezing cold, but good for the joints, good for the inflammation. Jody, welcome. Corey, hi to you. TZ Burton, thank you very much. And Crinch, good evening to everyone. Good evening to you, sir. TF Hatter, welcome. TZ Burton, Viva Fry is on. He is killing it. He's doing a great job. Shout out to Viva Fry. Bravo on the great work He is a dissident from his own country. I believe he's living in Florida now. Ostracized. That was a pun, unintended pun. Ostracized from his own country, his own government. I hit the juices. I hit the like to juice the algo so others may find Bob. Thank you very much. Yeah, if everybody can hit the like button, I'd really appreciate that. It helps me out with the YouTube algorithm. So let's continue. We began with energy. Let's continue with energy. I have another news story out on natty gas. We're expecting a tight supply of natural gas in 2026. Let's see what's happening here. Quiet open here on natural gas. Up only 1/3%. I mean, that's for natural gas, that's flat. It really is. We have 3 weekly higher highs. Oh, they tried to take this down. This is a potential 15-minute outside reversal bar. I think they're going to break natural gas out here. It's quiet. Too quiet. Lee Cable, welcome. Cold dives are good. Yeah, I try to stay in for about 5 or 6 minutes. I know it's not a long time, but my body is literally numb when I get out. I don't even feel the cold. I just know I'm probably going into hypothermia. TZ Burton. Sean, Mr. Sean, welcome. All right. Gang's all here. Good stuff. Good stuff. Let's continue on. Natural gas. I think they're going to break this out higher. We have about a little over less than 2 minutes to go in this 15-minute bar, but I think they're going to take it up higher. Let's check back in with oil, see what it's doing. Oil back above 1%. We know the price target that we're looking for. If it doesn't get up there, we don't care. If it does get up there, we do care. We'll put on a long position. We'll begin to pyramid up a position, meaning build a position. But we do want to know that the path of least resistance has gone from down to up. I would rather pay more for the probability of being right. That's the discipline. What else do we have here? Let's Gaso, is that it? Oh, RBOB. Gasoline prices. I got the symbol wrong. There we RB. RBOB gasoline prices, unfortunately, moving up higher by just shy of a percentage point. So you have what appears to be the price of crude and the distillates. Let's check in with home heating oil. I can't find it. Where is it? Come on. I always forget the symbol for home heating oil. Except when it's the dead of winter, then I'm staring at the chart constantly. Because I have home heating oil. Here we go. Oh, no, that's not it. Here we go. HO, duh. Home heating oil moving up as well, 0.89%. Let's take a look at the equity futures. Let's begin with the E-minis. E-minis opening up here. Let's drill down to a 5-minute view. All right, they're opening up. They're holding their positive open. NQ. This is the NASDAQ 100 opening up 0.16%. Looks like it's getting ready to take out the session highs. Perhaps. Small caps. Same deal. These charts all look the same to me. Mid caps. You know, there's a phrase I use or an analogy I use. It's not a phrase. I am no Shakespeare by any stretch of the imagination, but the analogy I like to draw is that you want to be careful. You want to be long when you're stair stepping up, you're hiking up the side of the mountain. And you need to realize when potentially you're on the opposite side of the mountain and you're going downhill. And we have a double top here. And I think this could be said for indices across the board. Double top on EMD, the mid caps. We have broken to new lower lows. Are we putting in new lower lows and lower highs? It's a possibility. So what we're going to do is we're going to create an alert. We'll keep it very loose. We're not going to stare at the screen. It's only a 15-minute chart, but we just want to get a vibe for what kind of price action we're seeing early on. Ideally, in a healthy bull market, you want to see a move up higher at the open, or even if we move lower, not a big deal as long as you press higher. Not a big problem. But what you don't want are lower highs and lower lows. And to be fair, this is only a 15-minute chart, so I'm not a day trader. I use this more when it comes down to 4-hour charts, daily charts, these observations. But you got to start somewhere. 15-minute, it's an observation, something to talk about while we're live here. Let's take a look at the U.S. dollar. Wow, dollar ripping up here. I have to say I'm surprised at the price action. I don't know the why behind this. It could be that the Japanese yen, let's check in with the yen. They had a new president that was elected over the weekend, and maybe they're killing. Yeah, that's what they're doing. That's exactly what they're doing. They're killing the yen. That's the reason why the dollar is so strong right now. The markets do not like the new president, at least the currency markets do not like the new president over there. Now, this is actually a good thing, a positive thing for U.S. stocks because this is probably good for the yen carry trade. So it may not be good for the exporters of U.S. stocks if the dollar keeps moving up higher. It makes our goods more expensive overseas if the dollar rises. But as it stands right now, this is probably a net positive for U.S. equities, if I had to say one way or the other. Let's go back to comments. We have a bunch of people floating in here. Lee Cable, welcome. Hello, Bob. Hello, Scott. Welcome. Hood's been ripping, huh? Okay. Patrick, welcome. Welcome. All right, let's go to the euro. Euro dropping like a rock as well. That could be, I don't know, it could be because the Russian bombing near the border of Poland in the Ukraine. I know there were 5 people killed. I don't know whether they civilians. I don't know whether they were on the Polish side or on the Ukrainian side. I believe it was a family, so really, really sad. It doesn't matter what side in humanitarian terms, but in the as relates to the markets, if those people were on the Polish side, that's very, very bad. If anybody has any information on that, if you could please share it out, I would appreciate it. Let's take a look at gold. Gold up 0.11%. No weekly higher high yet. Silver down fractionally, potentially a double top. Something to watch out for. What else do we want to take a look at? PA. Palladium down 0.46%. Platinum up fractionally. So I want to check in with yields, because if you have the dollar up and yields up, sorry about that noise. Yeah, so you have the dollar up dramatically and the 10-year yield up as well. That's not going to be good for emerging markets. It's not going to be good for gold, silver in particular. In particular, gold, because gold is so extended right now. So I'd be very, very careful here with your positions. We booked about 30% profit on a gold mining stocks about 2 weeks ago. So we lightened up. We had big profits, but they became too big for our portfolio. So we had to scale them back a little bit. What else do you want to take a look? Let's take a quick look at live cattle. Still holding just off of all-time highs. Wheat. Let's go to the weekly chart, see how we closed out last week. I don't track the price of wheat and commodities all that much during the week. You know, all down weeks are not made equal. So, you know, what I look at here is that we were in a downtrend through the week of 818, gapped up the week of 825. And what we're doing here is we're putting in a bull flag setup. I think there's a very good chance that we break out. We have a higher low. I think we could break out here on wheat. Let's check out ZC. Very similar setup. Probably even more bullish than with wheat. Again, higher lows. But you got to wait for the breakout. You may be saying, why don't you buy now if you're so bullish? You could buy more contracts and get them cheap. That's not the discipline. All I know is that this is a head fake. I have no idea whether corn is going to go sideways, up, down. I have no idea. Humility is everything. Patience, everything. And I was not born with patience. Trust me, I paid a lot to learn through losses. Patience. You want to wait for the breakout, you want to wait for the retest, and you want to build your position. Pyramid up. Lastly, ZS soybeans looking good as well. And these names, you could rely more on seasonality to help define your risk as well. I think soybeans looking good. That bullish reversal bar last week. We didn't close at the highs of the week, but it was a good week nonetheless. We respected the lower band of this downtrend channel. We still have higher lows. So good stuff here. I think ag is firming up. I want to take a look at DBA. This is the agriculture ETF. Honestly, not looking that good. Not looking that good. So I would not buy this yet. Okay. Patrick, thank you for the information. It was 5 Ukrainians killed. Very sorry to hear. Not Polish. Okay, thank you very much, Pat. Yankees losing 13-2. Who are they playing? Don't tell me Boston. There'll be riots in the street. Is it food for Taiwan and China situation? Is it food for Taiwan? Uh, she's a nationalist. She's not going to like China. Those are blood enemies. So she's not going to help mainland China. She wants a bigger military. So the Chinese are not going to be for that. Russia rained missiles and drones on Ukraine in a massive overnight attack. Officials said on Sunday, killing at least 5 people. All right. Thanks very much. Really? They're playing the Blue Jays. I don't know. All right. I'm going to keep my opinions to myself. I'm a Mets fan when they win. All right. Let's get to it. Let's talk about the coming week. First off, we're going to begin. Folks, TrendSpider, what they're offering right now, if you're going to sign up with them, they're offering up to a 32% discount. Don't use it. Use my link below. Get 35%. Discount code CON35. And you only get up to 32% on the enhanced and premium. My discount code gets you across the board. So take advantage of it. All products are eligible for my 35% discount. Take advantage of it, please. Because we will be using their software when we go over stock chart requests. And for those folks that want me to go over your symbols, please enter them into the forum here underneath here. Larry's a bit of a contrarian, but we'll get to him anyway because we like Larry. Here's our comments so far. So just put your comments in here. And I don't want a credit card. All you do is helps me organize stuff. And we're going to be switching from this. I'll give you a little bit of a teaser. I'm having the entire website is being rebuilt. Back end, front end, I mean everything being rebuilt. And it was due. I built it back in 2014, and it was due. So a lot more functionality, a lot more reliability. It's going to be really, really cool. So more to come as I build it out. A little bit of a tease there. More to come. Prices will be going up, not on existing members, but I've been told, I have a consultant to tell me I'm underpriced relative to my competition. I need to raise prices. So, okay, I'll raise prices. So sign up now. You do not get the price increase, but you need to be a member now. And a lot more functionality coming down the road. And I give a TrendSpider away free to our silver and gold level members, so take advantage of it. Okay. So, you know what? I forgot to go over Bitcoin. I'll go over Bitcoin in a moment and XRP. Last week, we had the ADP employment report that came out, negative 32,000 jobs with an expectation of a rise of 45,000 jobs. We didn't get the government numbers because of the government shutdown, which is fine. Who cares? But keep that in mind. We had job losses according to ADP, private company, not a government agency. So I put some stock in these numbers. ADP says businesses cut jobs for the third month in 4 as U.S. labor markets takes turn for the worst. And when you take a look at the non-farm payroll, not non-farm payrolls, they didn't report, initial jobless claims, they don't give you what the actual was for whatever reason. Okay, skip it. Let's go to the reports that are coming out this coming week. Nothing coming out tomorrow. On Tuesday, not much coming out. Bunch of Fed heads again. Wednesday, FOMC Fed minutes. More Fed heads. Oh my God. These Fed governors, how much are they making per speech? There's really no economic data coming out this week except for consumer sentiment, which is okay, but it's really going to be a quiet week. So when you get a quiet week like this for the economy, usually the prevailing trend tends to remain the prevailing trend. It goes up. So the path of least resistance should probably be to the upside this week. Now, earnings coming out this week. Not a lot yet. I think that all changes the week after next. The only one worth talking about is, believe it or not, Constellation Brands. And the only reason why I say that is because a competitor, Diageo, is so beaten up. I want to buy it. I'm just not ready to buy it yet. Even Constellation's brands, this whole sector is just getting destroyed. Here's Diageo. I went in to go buy a bottle of Macallan 12-year-old the other day, and it went from like $75 up to like $97. Ridiculous. So Diageo looking good here. I think these names are beaten up. They're looking very, very interesting. Diageo's got a forward yield of 5.17%. Constellation Brands 2.87%. So these are interesting names that are going to be reporting in the coming couple of weeks. And again, Constellation Brands comes out on Monday after the close. Delta before the open on Thursday, PepsiCo, and that's really it. Last week, we saw the Federal Reserve's balance sheet really drop like a rock. We broke down below 6,600,000,000. So that means that there's pressure to the upside on bond yields. Schiller PE ratio, we closed out the week for the first time since 2000 above 40 on the Schiller PE ratio. The Buffett indicator, strongly overvalued. Folks, this is not going to end well. Maybe this week, maybe next month, maybe next year. I don't know. This is not going to end well. Here's where we're at on the Dow Jones Industrial Average going back to, looks like 1915, 1914. We are right at the upper band of the rising uptrend channel going back over 100 years. So buckle up. And what they're saying here is that you have a megaphone formation. What that means is that back here in 2000, we hit the upper band, pulled back. We put in a low. The problem is that in 2008, we never made it up to the upper band, yet we took out the prior low. And that's what formed that megaphone formation. In essence, you have higher highs, but also lower lows. No bueno. Average call volume. This is speculation mania. This is the retail investor buying very, very cheap call options, even cheaper, or put options because nobody wants them. CMBS delinquency rate. This is commercial real estate. We are now at 11.7% delinquency rate on this paper, yet there are no regional banks going belly up. The Federal Reserve is bailing out the regional banks behind the scene, guaranteed. And here's what I was talking about earlier. Prices set to jump after OPEC raises output by far less than expected. So Reuters, with their anonymous sources, allegedly manipulated the oil markets last week into crashing, in essence, down over 7% on the week. And now they're being bid back up. Here's the close. Horrible close. We're not going to touch oil till we close back above $62.50 the barrel. And I saw this, and this got my contrarian antenna. I don't reply back to a lot of tweets. This one caught my attention. From barchart.com, Berkshire Hathaway is now underperforming the S&P 500 by 26 percentage points since Warren Buffett announced his retirement. To be fair, they went to cash. They have over $300 billion in cash, while the S&P 500 has continued to grind up higher. So let's cut some slack here, because when the floor or the floodgates of hell open up for the S&P 500 and the triple Qs, it's going to be Berkshire that traditionally is there bidding up the market at the very lows of the sell-off. So they may be underperforming now, but they'll be catching the falling knife at historical support levels soon enough. Losing my voice. We have a small group tonight. Let's go to the monthly charts. I'm going to do a quick breeze because I'm losing my voice. CRB Commodity Index. Okay, what we're doing right now is we want to take a look at the markets from a monthly view. We have a week in the books. Did we make new monthly higher highs? Did we not? Do we have inside bars? Have we failed to proceed up higher so far in the month of October? Let's get curious. CRB Commodity Index. No new monthly higher highs. No new monthly lower lows. Not doing a lot. So that's good for if you're worried about inflation. Bond yields, new monthly lower lows. And it's hard to see here, but we are trading down below a support level on the 10-year yield. So I want to bring up the yield curve. Yield curve, big gap down so far on the month. Okay, so the markets, big gap up, a big gap up on the month. So that should have folks a little bit worried about equities. TLT, 20-year bond ETF. We gapped up into the wick, that little line, a little chop on top of the candlestick. When you get a gap up into a wick, that's a pretty bullish event. I would say that the path of least resistance at current, there's no trend here whatsoever. At current, very short term, I think that there's less resistance to the upside than to the downside for bonds. Therefore, yields should pull back. The question is, why are yields pulling back? Is the economy that weak? Well, looking at the ADP report from last week on the jobs, yeah, it is. Tips. We've also gapped up into a wick. What has me a little bit concerned is the weekly chart, where we faded off the highs of the week. All these charts are in my head. The dollar, gapping up at current, not reflected on this chart. As of the close on Friday, we are down on the month. UUP, how is this possible? Forward yield of 6.3%? I think that's wrong. Maybe I'm wrong. How could the dollar yield? Euro, down on the month. We know it's down big right now. Yen. Yen is up by about a third of a percentage point. Bitcoin, let's refresh. On the month, we're up already. It's only the 5th, about 8%. XRP on the month, 4%. And I think that this is going up higher weekly chart of XRP. Let's update this. Boom. Beautiful wedge formation. I think that we're going to put in a higher low from here. And this goes up. Let's get rid of that. Volatility. You wouldn't know it. You look at the chart of the S&P 500. We're up on the month by 0.41%. We were up big last month. But you go to the VIX is up as well. It's not supposed to be. I've been talking about this with members that we're seeing the VIX trading up with the S&P 500 trading up. That's not supposed to be. And in fact, volatility, this is probably one of the most unspoken about bullish divergences on the VIX that I've ever seen in my life. Volatility bottomed out back here. July of 2024, over a year ago. This is while the S&P 500 is making all-time record highs. So, from all the way back here, when the VIX was at its lows, the S&P 500 has trended higher, and the VIX has failed to confirm. That's not supposed to happen. Sentiment, advances versus decliners. I mentioned last week that, I think it was last week, that it looked as though we were going to break out and above this upper band of resistance. We were rejected. Even though you have the Mag 7 names continuing to gyrate up higher along with the NASDAQ composite. Now, when you take a look at the number of stocks on a percentage basis trading above their 50-day moving average, that improved somewhat last week, looking pretty good. And on the month, well, it was only 1 week, looking pretty good. So it looks as though we have the laggards of the S&P 500 moving up higher, whereas the Mag 7 names, they're starting to peter out here a little bit. We'll talk about Palantir. We'll talk about Netflix in a moment. NASDAQ stocks trading above their 50-day moving average, monthly time frame, 55. This is improved. I saw this down to 30 2 weeks ago. Didn't close there, but down to 30. So the NASDAQ has just gone parabolic. Excuse me, the Qs have gone parabolic. And again, you have the laggards of the Qs driving the triple Qs up higher. The Dow transports, they look ready to move up higher. And they have not been confirming the new all-time highs on the Dow Jones Industrial Average. Here's the Dow Jones Container Index. This is not looking good. Think about what this represents. Containers. You need packaging for your goods. If you're making goods, your products, you need stuff to wrap it in. Well, they're not making stuff. They're not making more of it than they were this time last year. This is clearly a chart that's weakening and not indicative of growth, commerce, expanding. S&P 500 monthly chart, new all-time record highs. Here's the Dow Jones Industrial Average, all-time record highs. Qs, all-time record highs at some resistance though. Mid caps, excuse me, small caps, all-time record highs. The banks, they've stalled out here for the past 3 months. We're going to call this a consolidation with odds still favoring bulls. If we break trend, different story, then the path of least resistance may change to the downside. But as it stands right now, we're consolidating. We're probably getting ready to break out higher. Technology. Extended relative to the third standard deviation Bollinger Band in red, frothy. Discretionary names, monthly chart, down on the month, but wait early. We don't want to pass judgment yet. Energy, I think that this just fell victim of the manipulation or alleged manipulation of the oil markets last week. We own some oil stocks and an ETF. I was asked early about OIH. I'll talk about OIH in a moment when we go to the trend spiders chart. EEM, very extended. The dollar gapping up here is not going to bode well for emerging markets. They are hypersensitive to a strong U.S. dollar, so be careful. Now, utilities, we put on a trade here about 2 weeks ago. We're up on this, I don't know, about 12%, maybe a little bit more than that, about 12%. I'd say this is a leveraged product. So we have new monthly higher highs on utilities. Good stuff. Crude, we talked about ad nauseum. Natural gas, new monthly higher highs. They're trying to break it out above a resistance level. Let me show you what I mean. Right there. Here's your higher low. Telling you right now, they close this above 350. Natty gas is going a lot higher. Gold, all-time record highs. RSI, monthly time frame on gold, above 90. Gold mining stocks, RSI, monthly chart, 82.77. Folks, we've booked some profits here. We fed the geese. We made some profits real. Think about selling covered calls. Protect your position, especially with the dollar moving up higher, yields moving up higher. Now, if you get commodities breaking out, which it doesn't appear they're doing right now, that could keep the price of gold and the mining stocks moving up higher. SLV, not all-time highs, but quite close to it. Silver miners, down on the month so far by 0.9%. Lastly, NUGT, well, we're not going to go over this one. I'm losing my voice. I got to get to the members' requests. Let's take a look at what we got. Do a refresh. All right, I'm going to go over OIH first because I promised. All right, OIH, Oil Services ETF. These are the auto fibs. I'm going to take the auto fibs off. You can see they retested support last week, and it held. Okay, so this is the automated trend lines. I did not draw these. This is just a click of a button. and we're struggling to hold resistance at around, let's round it up to 265. That's the sweet number you want to see this ETF trade above and close above, more importantly. Right now, we're struggling to hold it. We closed above it last month, but this is a retest. This is a retest of a breakout point. I think that if oil moves up higher, OIH is going to move up higher because we know the correlation with oil is pretty good. Let's go to a daily chart. And remember, light sweet crude, you want to see 62.50 the barrel. If you see light sweet crude close above 62.50 the barrel, I'd be a buyer of OIH, GUSH leverage product, or XLE. Choose the one. But gosh, GUSH is a leverage product. Just be careful. Also, on daily chart here, you have resistance. Again, around that 265 mark, I would want to see a close above that mark before I did anything on OIH. Critical resistance. I want to talk about Palantir. And we had some great trades last week. We made a lot of money last week. But Palantir, we got stopped out of. Now, we got stopped out of, but we still made money. Not that much. So why is it my best trade of the week? It's because we did not let a profit turn into a loss. We know our strategy right now in this market is that we know that at any one given time, because I have traded 2000, I've traded 2007, 2008, 2009, I've traded COVID. When things begin to go south, it happens very, very quickly. And you had better be protecting your paper gains or they're not real. And in reality, even if you have a stop loss, they're still not real. You got to keep moving that stop loss up. Even with UTSL, I'll come back to Palantir. UTSL, we're up 12%, over 12%, but I still have a 6 or 7% trailing stop loss order. Let the markets take us out. It's in fuego. I don't know if we're at the top. I have no idea. I'm not that smart. The markets are going to take us out. LABU, another leverage product, which we're up nicely on. We did very, very well last week. What do we have? A trailing stop loss order. I don't want to lose out on the upside. I want to stay part of the party. However, I do not want my paper gains evaporating. Trailing stop loss orders, folks. Please, I beg of you. So I did not have a trailing stop on Palantir. I had a static stop because we weren't up that big on it to convert it into a trailing stop. And here's what we do. It's very simple. We see support. I buy in here. Well, guess where my stop goes? Right there. I buy here. Guess where my stop goes? Right here. Right below support. So we kept moving it up. We got taken out at 182 and change on Palantir. We closed at 173.07. Think about if I had the mentality, as I did when I was younger, man, I let those losses, I let all that money go, get away from me. I didn't keep it all. Now that I'm older, I think about what a loss I could be sitting with, and my mentality going into the new trading week would have been horrible because I allowed a profit to turn into a loss. That would have caused horrible mentality. That gets you back to that stinking thinking mentality. You gotta, what is that? You gotta claw your way back, and it's a horrible way of thinking. Just don't do it. Just use a stop loss order. I'll leave it at that. So this is my favorite trade of the week last week. We didn't make a lot of money here, but we didn't lose our profits. We used our discipline, and it worked. So Palantir is in a lot of trouble here. To their credit, I believe the reason why the stock got hammered is they refused to participate in the Brit card over in Great Britain because that country is in a lot of trouble right now with the digital IDs. I don't know if they've abandoned it yet, but they've gone full board totalitarian over in England. Let's talk about CVI. This is for Larry, CVR Energy. This has really been bucking the trend of the energy stocks. We managed to break through resistance. Again, the power of the automated trend lines. We broke through resistance, pulled back, tested, follow through. I get the vibe that you're going to pull back here a little bit. I'd be looking around 35.53 to buy and then put a stop loss right below 35, 34.89. That's what I would do there. But I think the trend is up. It wants to go higher. You do have resistance above, no doubt about it. It looks like we almost came close to tapping that resistance at around 38.50, around there, and then we backed off. So no great shock. I think it's going to pull back, consolidate, probably move up higher. Silver, we kind of already went over. I'm cautious on silver. We're long. This is a leveraged product, folks. I mean, on a monthly chart, we're leaning again into the third standard deviation Bollinger Band. Weekly chart, you know, we're just so extended. Great volume still. It doesn't mean it can't go higher. I just would not initiate a new trade. Price target, 87.43. I think we're going up that high. I think we're going up that high. I remain bullish. We own it. Sean, ATOM. This is going up, but not before we get a retest of around 450 to 460 per share on ATOM. I'm a buyer at that level, and I would add more on a continuation move up through $5 per share. So again, pyramid up, build your position. Daily chart looks awesome here. Daily chart looks awesome. There may not be a pullback tomorrow. It may just move up higher. I mean, this is a pretty bullish chart. You know, we broke out above resistance here on the first. Day one of consolidation, nice. Day two, follow through. I think we're probably going to move up higher here on ATOM, bullish. NVO. NVO, I'm very, very bullish on. What is this yielding? $2.76%. I think we're done going down here. Here's what I always talk about is you want to look for your higher low. And we sit back and we ask ourselves the question, do we have a higher low? The answer is, yep, there it is. Are we consolidating? Yep, there we go. I'm a buyer at this level. I would buy more on a breakout and a close above 61.50 per share, daily chart. We broke out on Friday. Any retest of, you show me a 59 handle. Where do we close? We closed at 59. You show me a low 59, I'm a buyer. Any pullback here, I'm a buyer. Novo Nordisk, up. Bullish, going up. It's a recovery play. So it's not a swing trade. You know, you're going to have weeks of it do nothing, but I think longer term, it's going up higher. You're collecting a divvy, so enjoy your dividends. Last chart up next. Oh, this is pretty. Let's go to the weekly chart. Nice. Step one of recovery is you must stop going down. We did that right here. September the 15th, the week of September the 15th. Lows. No new lower lows the week of the 22nd. We held support on the week of the 29th. Bullish. It's going up. My mouse just decided to stop working. Okay, there we go. Daily chart. Yeah, I like this. It's a little W formation. You get a close. I'm fine with nibbling here. You get a close above $7.50. You want to be a buyer. I think it goes up higher. And that, my friends, is it. George, you're very welcome. Thanks for being here, Franklin. You're very welcome. Courtney Turner and Patrick Woods did a technocracy round. I know you typed it right. I just can't say the word. Technocracy roundtable on YouTube yesterday, explaining the UK digital ID. The planners want worldwide digital identification, total control. Yeah, it's just the bankers wanting a piece of every single cent that you pay out. That's it. That's why they love debit cards. They love credit cards. They don't want any more cash. They want a piece of every single transaction that takes place. Always follow the money. You're very welcome, Pat. Best of the family, my friend. Michael, hello. All right, guys. Thanks for being here. Have a profitable trading week. I'll talk to you soon. Don't forget about TrendSpider. Like, subscribe. You know the deal. Be well.